is, if you're starting out in trading, don't risk more money than you can afford to lose. And I think that's the easiest way to guide your account size. I think you can take it for granted that your first trading account, or two or three, sometimes a lot more in many cases, will be lost. Hello everyone, James here. I get a lot of questions every day on my YouTube channel and my X channel as well, asking me various basic questions about trading, particularly from new traders who are not quite sure how to approach this incredibly amazing opportunity called trading or day trading or swing trading. So I thought I'd write them down. I've got 6 questions written down here and go through them with you and address each question one by one. And hopefully, perhaps this will help you with your trading and give you a little bit of direction into where you should be going. The very first question, and possibly the most common one, is how much capital, how much money do I need for trading? Well, that really depends on what you're trying to achieve. If you're dabbling in it as a hobby, probably not very much, a few $100s, a few $1,000s. And of course, it depends on your style of trading as well. So if you're a day trader, you might need less money. If you're a scalper in and out, trading off 5-minute charts, you might need less money. However, if you're a swing trader, in other words, you're looking for the biggest swings in the market, we'll talk about strategies just now, because that's one of the next questions. If you're a swing trader, you might need some more capital. And if you're a buy and hold investor, which many people are, and when we talk about trading, a lot of people think that's what trading is, buying, picking a stock like Apple or Tesla or Microsoft or something like that, and holding that trade, perhaps buying on the dips, perhaps dollar cost averaging in. But that's not really trading. That's more like investing or smart investing. So if you're an investor or a smart investor, you probably need a lot more money, or you could start off with a smaller amount and start adding money in and buying various stocks that you think might be worthwhile. But if you want to trade for a living, in other words, that's how you pay your bills, that's how you pay your mortgage and your grocery bills and pay for your holidays and your car and that sort of thing, then you might need a little bit more money. And you might be day trading or swing trading, depending on your style. You might need a different amount of money. But it all depends on what you're trying to achieve, what your living standards are, how much money you need. So there's no real easy answer for it. I think the simplest answer is, if you're starting out in trading, don't risk more money than you can afford to lose. And I think that's the easiest way to guide your account size. So if your goal is to trade for a living eventually, I'd suggest you start with a relatively small amount. Now, small might mean different things to different people, but I'd say in the region of maybe, $1,000 to $10,000, something like that, depending on your budget and how much you're willing to risk. When I started trading back in, I think it was 1998, quite a long time ago now, I think I started with $1,000, which was a lot more money then than it is now, of course, because of inflation and the devaluation of our currencies. But still, I started with $1,000 and I gradually grew that account bit by bit over the next year or 2 or 3. However, that's not without losing that account once or twice. I'm pretty sure in the beginning, I can't remember precisely, but I'm pretty sure in the beginning I may have lost or blown my account once or twice. Luckily, I was still working as a consultant, as an engineer in the Middle East, and I was able to replenish those funds. And in my off times, in my times back at home, off contract, I was able to refine my trading strategy and improve my trades. So I think you can take it for granted that your first trading account, or 2 or 3, sometimes a lot more in many cases, will be lost. You'll be making mistakes. You'll be getting into emotional situations where you don't want to take a loss. You'll hold on to losing trades. You'll oversize your trades, put too much money on a single trade idea, and not get out when you should, either by stopping or hedging, and eventually blow an account. This happens to most traders. In fact, probably all traders. So bear that in mind. Whatever amount you put into your first account, you're probably likely to lose. Hence, it's a good idea to start with a small amount, let's say $5,000 or $1,000. Learn to trade. In fact, there are better ways to do it. You could start with a prop trading account, buy yourself a prop trading account with a firm like Hola Prime, and start by risking a very small fixed amount of money, the amount of money that you use to purchase the challenge account, knowing that no matter how much you win or lose on your challenge account, it's not going to directly affect your pocket. The only thing you'll be out of pocket is the initial amount, and it's not that much. You could also start by trading with a demo account. Many traders do this. It doesn't really replicate the feeling of trading with real money, but nevertheless, it gives you the idea of the mechanics of trading, and you can iron out many of the sort of procedural things that you may need to work on. How to enter a trade, how to exit a trade, how to read the charts, what the symbols are, all sorts of things, how your broker reacts to certain market conditions. So I think that's a pretty roundabout answer for quite a straightforward question, but I think that's the best I can do. So start with a small amount, or buy yourself a prop trading account, challenge account, and start by risking a much smaller amount of money. Or just trade with a demo account for a number of months until you get the feel for it. Maybe 6 months to a year is probably a reasonable time frame, and then perhaps open your first live account thereafter.